So I just wanted to focus in on the New Zealand dollar Swiss franc for a moment. It's been hard to find FX stocks that have been in a secular downtrend. Um, and you can see from this chart here that that has been the case for the New Zealand dollar against the Swiss franc for some time now, since, well, I don't know, probably since forever. New Zealand dollar is a piece of shit currency. Sorry to my brothers from across the pond, but yeah, just like the Aussie dollar, it's a shit coin. And you could probably say that about all currencies, since the only trajectory for any currency is down, given the effects of the printing of money by a sovereign country. Either way, what I'd like to do is just focus in on this markdown area. I'm not too much going to deal with this trading range over here. For the first time in a while, the New Zealand dollar is showing some strength against the CAD, against the Swiss franc. So let's move back in the chart to okay. Just marking out the area where the daily simple moving average is at this point in time, and moving into the 4-hour chart. Change the color of this thing over here, and look for a more definitive close below the simple moving average. So move into the 15-minute chart and relocate the volume profile fixed range which the 15-minute volume fixed range volume profile is acting as resistance at the moment. I'm just going to zoom out to see where the 4-hour fixed range volume profile is, and it is also acting as resistance. Now we do have some support over here and over here, and price will test the neckline of a accumulation trading range over here as it proceeds on its downward trajectory. So we'll just see where we find a short position along the way. Okay, so obviously we have a buying climax up the top here, and you can see by the volume in that buying climax that there is basically no demand in this area, and as price comes down, there is a definite increase in the volume signature. You get an increase in the volume signature, and a pretty much like a failed attempt to rally, increase in the volume signature. We get to the neckline of the area of no demand. We have another increase, and we have like institutional volume footprints coming in through in this area here and in this area here. So at this point, Where we draw the parameters of the trading range, I'm not entirely sure. What I would think is that we could use the bind climax over here, automatic reaction, secondary test, sign of weakness in phase B, and that would be our trading range. We get an up thrust action. I mean, according to Roman, that is shortable, but not really something I do in the FX market. Gonna have to zoom out. I'm really struggling to. This is a big area of quite a large trading range. Okay, so now we've moved below the daily SMA. Interesting. Starting to make more sense. This is looking like a backing up action. In phase D. Increasing the volume signature. the breakout of the backing up action. What I actually wanted was for that. I'm going to flatten this for a second. Here we go. But that to really actually just break it the fuck out. That was a good enough breakout. Now, I want to be protected in that stop by the low volume areas. And I believe that there is enough cause. Now, we're going to assume that this range is a redistribution, given that the cyclical trend, the secular trend is down, and that is exactly the case. So let me just apply some markup to this chart to help better understand what exactly the premise for this trade was. In fact, what I might do is I'm just going to assess this trade a little bit differently. There are, okay, so you could look at this and say buying climax, automatic reaction, secondary test. But I think that would actually be wrong. And I would look at this as an area of minor accumulation. And then we get that accumulation moves into a distribution at the neckline of the previous distribution. And then we have a distribution as a backing up action that occurs in the middle of the trading range just here. And then we have the backing up action to the mid-level distribution range occurring at the neckline of the previous trading range. So this is quite a complex trading range with many accumulations and distributions occurring throughout the range. The whole structure itself, if you were to look at it as one thing, demarcated by these white lines in the top here and the white line at the bottom here, took about a month to completely develop. And the weakest point of the range, obviously, is the backing up action at the bottom of the trading range. And taking a short of that particular backing up action, given the read on the price that I have, was the correct thing to do, the correct area of the price action to look for an entry, because it was the area of the structure most likely to provide a 3-to-1 risk reward, since it was not constrained by the parameters of the trading range, that being the low and the high demarcated by the trend lines.